If you're a stock trader, I urge you to not read company news about the stocks you own or about those you are thinking about buying. Now that seems counterintuitive, but I'll explain why, and then do my analysis of the markets, give you my assessment of where markets are likely to head in the near term. Finally, we'll look at the day trade of the week. That's all coming up in this week's Stockscores Market Minutes. All right, so I know some of you are probably saying, how can you possibly tell us to not read the news about the stocks that we own or the stocks that we are buying? There's a very good reason why. You see, information that is public is already priced into the stock. So if a company issues news about their earnings, about products that they're developing, about a new find for a gold mining company, that sort of thing, that information gets priced in almost immediately. And once it is priced in, once the price of the stock reflects that information, there's really no value to that information. Now you might say, well, what's the harm? Well, there is a harm, because when you read into the company's story, particularly with smaller cap stocks, it's easy to fall in love with the company. And then if the market starts to turn, if the stock starts to break down and give you a sell signal, you might ignore that sell signal because you've fallen in love with the story. If you don't read the news, then you ultimately trust the market's opinion by looking at trading activity. If a stock is likely to go higher, it'll have rising bottoms on the chart, it'll be breaking through resistance, it'll have upward momentum. It's a good stock to hold. On the other hand, if a stock starts to break upward trend lines, break down through price floors, break down from falling tops, the things that we talk about here on the Stockscores YouTube channel, those are negative signs, and ignoring those because you've fallen in love with the company's story is pretty destructive. So please stop reading the news. It'll only make you delusional about what the company is actually up to, focused on the past and not on the future. All right, let's get into this week's Stockscores analysis of the markets. Starting us off with the S&P 500 ETF, SPY. This is the short-term intraday chart, and you can see that we had some weakness this past week. But we're still sort of trying to hold on to that upward trend line. You could argue we've broken it, but it's not from a falling top. So we may see it do something like that. I think a little bit of caution warranted in the short term. The long-term chart is still fine. You can see nice gains for the S&P since that breakout. And maybe we just got a little overextended to the upside and we'll make a short-term profit-taking pullback. Not the same story on the small cap stocks in the US. This is the IWM, and you can see a little more pronounced weakness in the context of the run higher. So it didn't really have the same run higher, and now we're seeing the weakness. So I would be somewhat more cautious with the small cap stocks. And again, unlike the S&P where it's been trending upward, the IWM has only been able to trend sideways. And so for the retail trader, we tend to sort of focus on more of the small cap stocks, and that's where the action is. And you can see that the action has been muted. The real place to be in the stock market in the last little while has been those large cap tech stocks, which have been somewhat immune to the interest rate rising environment. All right, let's take a look now at the Canadian stock market, T.XIU. And you can see in the 1 month time frame, downward trend, so that's bearish. 3-year time frame, sideways market action with support here, and we're falling into that support. So we should see a bounce off of that in the next week or two, but until it happens, I recommend some caution in the short term. All right, now let's move along to commodities. We'll take a look at gold first. And on the 1 month time frame, you can see the trend is down, so bearish on gold. On the 3-year time frame, critical this week because we're breaking that upward trend line. Not really from much of a falling top, I suppose, but it is a negative for gold, and so I would be cautious on the heavy gold stuff. Let's move along to oil, USO. If we look at the 1 month time frame, you can see it's sideways but very choppy, and that volatility tells us that there's a lot of uncertainty about oil prices. It's still a sideways trend, so it's not terrible.
On the long-term chart, you can see we're generally trending down towards support. We had the breakdown there. It's been pretty sideways trading on oil for the last 6 months. If we actually break down through this again, then I think we're going to have to go bearish. But for now, I'll keep it at neutral. On to currencies, let's take a look at UUP, which is the US dollar. And you can see breaking this little short downward trend on Friday. And that is a positive because it's from a bit of a rising bottom. Now, there's not considerable upside because that's where resistance is. But the US dollar looking not too bad. The real action this past week was in Bitcoin and maybe other cryptocurrencies. You can see we had that strength on Friday, which I highlighted last week. And we got some good follow through on that this week, as Bitcoin is really caught some buyer interest again. So I think it's a place to start looking for trades. This past week we had good trades in many of the Bitcoin miners, Mara, Riot, Hut, BITF, there's a bunch of them. And they are doing fairly well again after a very long period of not doing well. Now finally, let's take a look at the interest rate chart, TVT. And actually we got a little bit of a breakdown in interest rates this past week. You can see it dropping there, and although the commentary from Jerome Powell was that there will be further interest rates in the future, the bond market responded with lower interest rate outlook, and that's what you see in this chart. So kind of interesting that that's happened. All right, let's take a look at the ratings then. US stocks, long-term bullish, short-term neutral. Canadian stocks looking worse, long-term neutral, short-term bearish. On gold, I've switched to bearish on both time frames. Oil, still neutral on both time frames, but you could maybe get a little more negative than that. US dollar, neutral long-term, but bullish short-term. Bitcoin, I've upped my rating now to bullish on both time frames. And interest rates, long-term neutral, short-term bearish. All right, let's take a look at the day trade of the week, an example of a stock that we traded this past week. And on Friday, this kind of captured the sort of week it was. We had WORX was abnormal. You can see the abnormal volume. That's why we watch it. And we look for breaks of pullbacks or breaks of pullbacks from rising bottoms, even better. So you have your first break of a pullback there, and that led to a little bit of a gain. And then the better signal was this one. In a good market, this stock would probably have continued higher, but in this market last week, it was quite slow. So why is that? Well, it's the end of the quarter. That's very typically a slow period. You often see the market start to pick up first or second week of July. That's certainly what happened last year. We had a great summer rally in July, and perhaps the market will do that for us again. But it's very typical the last week of June that things are quite slow, and it can continue into the first week of July sometimes. So I recommend just being extra fussy right now if you're a day trader. But as I've said, we often get that rally in the summer, and make sure you're there for that. All right. So hope that you've enjoyed this week's Stockscores Market Minutes. If so, click on the like button, leave a comment. Where do you think interest rates are going? The bond market, very different from what the headlines are telling us, and I'm curious about your thoughts there. Hope you have a great week in the market and trade well.